When the economy crashes, most people scramble to protect what little they have. But for billionaires, recessions aren't disasters. They're opportunities. While the world panics, they quietly move their money, strengthen their positions, and set traps for future wealth. From building massive cash reserves and snapping up undervalued assets, to securing their fortunes with legal structures and investing in industries that thrive during downturns, they play the game differently. They don't just survive, they grow richer. Today, we'll pull back the curtain on the exact strategies billionaires use to protect and multiply their money when the economy is at its worst. When the economy crashes, most people tighten their belts, cut expenses, and hope for better days. But billionaires? They see a storm coming and start preparing to sail right through it. While the average person fears losing their job or their savings, the ultra-rich are already thinking 10 steps ahead. They don't panic because they know one truth most people overlook. Recessions are temporary, but the opportunities they bring can be life-changing. For them, a downturn is not the end of the game. It's the perfect moment to reshape their wealth. They understand that markets move in cycles, and when everyone else is running for cover, the best deals are hiding in plain sight. Billionaires stay calm because they've built their fortunes on patience, strategy, and timing. They treat a recession like a chess match, where every move is calculated to gain an advantage when others are losing ground. They study history, learn from past crises, and trust their ability to adapt. They don't chase every opportunity, they wait for the right one. Most importantly, they see fear as a signal, not to run away, but to look closer. Because when the world is panicking, assets drop in price, competition fades, and the playing field clears. That's when billionaires make their boldest moves. In their eyes, a recession isn't just a test of wealth, it's a chance to grow it. And the first step is having the mindset to see beyond the chaos. When the economy slows, cash becomes the most powerful tool in a billionaire's arsenal. While the average person struggles to keep their savings intact, the ultra-rich are quietly stacking liquidity months, sometimes years, before trouble hits. They know that when markets tumble, prices drop, and opportunities appear out of nowhere, the ones with ready cash get to choose their deals. Billionaires treat cash like a shield and a sword. As a shield, it protects them from being forced to sell their assets at a loss. As a sword, it gives them the power to strike quickly when an undervalued company, a prime piece of real estate, or a distressed investment hits the market. They aren't hoarding money just to watch it sit idle. They're creating a war chest, a reserve of capital ready to deploy the moment they see a high-reward, low-risk opportunity. And because they aren't scrambling for loans or liquidating stocks in a panic, they can negotiate from a position of strength. In the billionaire playbook, the recession isn't the time to spend recklessly. It's the time to conserve, calculate, and then deploy with precision. Cash gives them the patience to wait for the right opening and the confidence to seize it. While most people think diversification means owning a mix of stocks and bonds, billionaires take it to another level. Their portfolios aren't just spread across different sectors. They're spread across the world, different currencies and completely different asset types. During a recession, this strategy becomes a lifeline. If the US market dips, they might have holdings in Asia or Europe that stay strong. If tech stocks crash, they might still profit from agricultural commodities, energy projects, or luxury real estate. Billionaires don't keep all their eggs in one basket. They keep baskets in different countries, currencies, and even industries that don't move in sync. This way, when one area takes a hit, another can offset the loss. They also look at alternative investments the average investor can't easily access. Private companies, rare collectibles, venture capital funds, or even stakes in sports teams. These assets often move independently of the public markets, giving them more stability when the economy turns shaky. For the ultra-wealthy, diversification isn't just about playing it safe. It's about staying profitable no matter which way the wind blows. When paper markets swing wildly, billionaires turn to assets you can touch, feel, and hold. Things that don't vanish overnight in a stock market crash. Gold, luxury real estate, rare art, classic cars, and even vintage wine become their safe havens. These hard assets are like financial anchors, holding value when everything else seems to sink. Gold, for example, has been a universal store of wealth for centuries. When currencies lose value or inflation surges, gold often moves in the opposite direction, acting as a hedge. Real estate, especially in prime global locations, not only maintains value but can generate steady rental income during tough times. Fine art and collectibles, while less common for everyday investors, offer billionaires both prestige and protection. These assets aren't just for show. They're part of a calculated strategy to store wealth in something tangible. Even if markets freeze, hard assets can be sold or leveraged for cash. And because they're limited in supply, their value often rises over time. For billionaires, having part of their fortune in hard assets isn't just a luxury, it's insurance. Not all industries suffer equally in a downturn. Billionaires know this and position themselves in sectors that people can't live without, no matter the economic climate. Healthcare, utilities, consumer staples, and essential services become the backbone of their portfolios when the storm hits. In a recession, people might stop buying luxury goods, but they'll still buy groceries, pay their electric bills, and need medical care. Companies providing these essentials tend to hold steady or even grow when others are struggling. Billionaires often shift more capital into these defensive stocks to preserve stability. They also look at companies with strong balance sheets, low debt, and consistent demand. These businesses can weather downturns and even expand while competitors are retreating. Some billionaires take it further, buying stakes in undervalued companies within these sectors, knowing they'll bounce back faster once the economy recovers. For the ultra-wealthy, recessions aren't about avoiding losses entirely. They're about placing bets on the few corners of the market that keep moving forward when everything else stalls. While the average investor is glued to the stock ticker, billionaires often make their biggest moves where the public can't see, in private markets. These off-market opportunities range from buying stakes in family-owned businesses to funding startups poised for explosive growth, or even acquiring distressed companies at bargain prices during a downturn. In a recession, many smaller businesses struggle to stay afloat. For billionaires, this is prime hunting season. They can step in with capital, restructure the business, and either sell it later for a profit or keep it as a cash flow machine. Private equity firms, venture capital funds, and exclusive partnerships become their playgrounds, offering high returns without the volatility of public markets. These deals are rarely advertised. They happen in closed boardrooms, through networks built over decades. Billionaires have the connections, legal teams, and resources to find these opportunities before anyone else even hears about them. It's not just about money, it's about access. And in a recession, access often determines who comes out richer on the other side. For most people, debt during a recession is a danger. For billionaires, it's a strategic tool. When interest rates drop, the cost of borrowing falls, and the ultra-wealthy know how to use this to their advantage. They take out low-interest loans not because they're short on cash, but to acquire high-value assets without tying up their own money. Imagine buying a prime building or a controlling stake in a company using borrowed funds at historically low rates, while keeping your own capital free for other deals. If the asset grows in value, the gains far outweigh the borrowing costs. Billionaires also understand that debt can protect liquidity. By using someone else's money for investments, they keep their cash reserves intact for emergencies or new opportunities. They don't take on reckless debt. It's always backed by strong collateral and a clear plan for returns. In their hands, debt becomes a lever, magnifying gains during recovery. For them, the question isn't, should I borrow, but how can I borrow smart to grow even faster? Billionaires don't just protect their money from market swings, they also shield it from taxes, lawsuits, and political changes. One of their favorite tools? Complex legal structures like trusts, offshore accounts, and holding companies. These aren't shady loopholes. When done legally, they're powerful layers of protection. A trust can safeguard assets for generations, ensuring wealth is passed down without being eaten up by estate taxes. Offshore accounts, often in stable, low-tax countries, can diversify currency exposure and protect funds from domestic instability. Holding companies can own multiple businesses and properties, adding another barrier between the billionaire's personal wealth and potential liabilities. The goal isn't to hide money, but to build a fortress around it. These structures allow billionaires to operate globally, shift funds quickly, and adapt to changing laws. During a recession, when governments may raise taxes or markets become unpredictable, having assets spread across secure, well-planned structures keeps them out of harm's way. For billionaires, influence is as valuable as cash. During recessions, they often strengthen their position by funding causes, charities, or political initiatives that align with their interests. Strategic philanthropy lets them support communities while also enhancing their public image and relationships with decision-makers. Lobbying works on another level. By contributing to political campaigns or industry groups, billionaires can help shape policies that protect their businesses or investments. For example, they might push for tax incentives, industry bailouts, or favorable regulations during an economic slump. This isn't about manipulation, it's about positioning. When economic recovery plans are drafted, the voices with the most resources are often the loudest. And by being at the table, billionaires ensure they're not just surviving the recession, but steering the direction of the rebound in their favor. While most people wait for headlines to declare, "The recession is over," billionaires are already investing in the next boom. They watch key indicators: housing starts, manufacturing data, corporate earnings, and start moving capital months before the public feels the recovery. This early positioning means they buy assets when prices are still low, secure deals before competition returns, and set themselves up for massive gains once growth accelerates. They might acquire undervalued companies, expand their market presence, or invest heavily in industries poised for post-recession demand, like technology or infrastructure. By the time others realize the economy is bouncing back, billionaires are already cashing in. It's not luck. It's preparation, backed by data and foresight. In their playbook, the end of a recession isn't a finish line. It's the starting gun for their next wave of wealth creation.